This is IGCSE Accounting, October 2025. As usual, before we dive into the details, we are going to read the requirement to be clear of what's needed to answer. Right, the first requirement is to prepare manufacturing account for GH company for the year ended 31st March 2025. Requirement B is to prepare the trading section of the income statement for the same company for the year ended 31st March 2025. The trading section refers to the section until the gross profit only. That's the last part of the question. So only two parts. Okay, let us look into the details now. GH company manufactures car parts and has provided the following information relating to the year ended 31st March 2025. 1st April 2024 until 31st March 2025. That's the 12 months financial period. Right, when we want to prepare the manufacturing statement, or before we prepare the manufacturing statement, let's have the framework or the idea of the manufacturing statement in mind. First section is relating to direct materials, cost of materials consumed. Right. The next section is also about direct expenses. There's direct labor, production operators' wages. Right. Sometimes they may have direct expenses like royalty. Right. These two will sum up to the prime cost. Right. All direct expenses, direct material, and direct labor will sum up to the prime cost. Then we have the indirect expenses. We call it the factory overhead. And then after this section, we will add the opening work in process before we less the closing work in process to derive at the cost of production. With this framework in mind, as we run through the details, we are in fact mapping out the answer, right? So when we look at revenue, we know that this is relating to the trading statement, income statement, right? Inventory, raw materials inventory, opening raw materials and closing raw materials. These will be needed in the manufacturing statement in the direct material section. Cost of material consumed. This is also known as the direct materials. Right. Finished goods inventory is needed in the income statement, right? In the cost of sales section. After revenue, we will minus cost of sales. These are information required to check cost of sales, right? Salary for operatives' wages, this is the direct labor, is needed in the manufacturing statement in here. I tabulated that. Factory supervisor salary is in the factory overhead section. Office staff salary, this is expenses in the income statement when we need to find net profit. So as far as this question is concerned, we may not need to use this piece of information because we are only required to answer until gross profit, the trading section, right? After gross profit, we deduct office staff salary to get net profit. That part of the answer is not needed in this question. Purchase of raw material is direct materials matter. Purchase of raw materials will be tabulated in cost of materials consumed. Purchases of finished goods will be in the cost of sales section in the trading statement. Carriage of finished goods is also added to cost of sale, added to purchases in cost of sale. Factory machinery at cost and accumulated depreciation is needed to check depreciation for machinery. Later on, we will show in the factory overhead. Right? Rent and rates, it depends. If it is rent and rates that relates to factory, we have to capture in the factory overhead section. Later, we will read the additional information. If rent and rates is about office, that means not factory related, it will be captured in expenses in the income statement, right? Electricity charges also depends. If electricity charges is for factory, we have to capture in the factory overhead section inside manufacturing statement. If it is for office, then it will be expenses in the income statement. Same for insurance. right? We'll read from the additional information, see if it explains. Factory general expenses. This is obviously about factory overhead, right? Work in progress opening and closing. We will need it later on here. After factory overhead matters are tabulated, you have opening work in process added, then minus closing work in process. Right, so this one will be in the manufacturing statement. Okay, let's read additional information one. Depreciation on factory machinery is to be provided at 15% using the reducing balance method. Okay, let's tidy up this information. First, we take the cost of factory machine minus the accumulated depreciation. We check the net book value of the machine. 427,000 minus 187,000 is 240,000. This is the net book value. We multiply with 15% to check the depreciation amount for this year. 240,000 times 15% is 36,000. So this 36,000 is depreciation for machinery in the current year. It will go into the factory overhead. Next, rent and rates, 60% relate to factory, remainder being for office. Okay, this amount, $10,060, 60% is for factory. That means it will be factory overhead expense. So $1,060 times 60%. This amount is $6,036. It will be recorded in the factory overhead section in the manufacturing statement. The balance of the 40% is an expense in the income statement, right, after gross profit. So as far as this question is concerned, we do not need to show this information. We need not find net profit. We'll stop at gross profit. So we're not going to utilize this information. Electricity charges are to be split in the ratio of 5:3 between factory and office. Okay, so I extend here. Electricity, 5 out of 8 is for the factory. So we check the amount in the factory overhead. $5,080. Sorry, $5,840. It is a factory overhead item. Electricity for the factory. As for the 3 out of 8 portion is for the office, they'll be for expenses. We don't need that information to answer the question. Right. Insurance is split equally between factory and office. Okay, so insurance, we split equally half. 9,200 is to be charged to factory overhead. The other half is expenses in the income statement. So once again, we are not going to need that part of the answer done. It's not asked in the question. Right. So that's the additional information. We have tidied up all the required information. We are ready to tabulate the manufacturing account here. So the first section in the manufacturing statement is the cost of materials consumed. In this section, we'll start with the opening inventory. And in this section, it must be all about raw material. Opening inventory refers to opening inventory of raw materials, not finished goods, not work in process. Make sure it's about raw materials. And refer to the question is 21,700. Right. Then we add with purchases of raw material. It is $28,050. Then we minus closing inventory of raw materials. Refer to the question, the closing inventory is 60,400. The cost of materials consumed is $285,350. Next, the direct expense involves a direct labor, and it is the operatives' wages. Right, the factory operators' wages. Now we sum up all direct expenses to obtain the prime cost. $526,550. Now we're going to list out all the factory overhead expenses. Factory overhead expenses refer to all indirect expenses. The first one being the factory supervisor's salary. Next, the rent and rates, only the factory overhead portion, as checked above in the question. Rent and rates is $6,036. You can put a working, refer to note 1, this part of the working, note 1. Continue, electricity charges. You can refer to your working, note 2 above, right? The amount is $5,840. So this is your note 2. Okay. And your insurance for factory can be on note 3. This is your note 3. So insurance, also factory portion only, right? $9,200. Okay. That's factory general expenses, right? Then there's depreciation for machinery, it's $36,000. This is your prompt. Now we sum up all the factory overhead expenses. We add the prime cost with the factory overhead expenses. Now we add the opening work in process from the last accounting period should have been completed by end of this accounting period. Therefore, we add on the opening work in process, refer to the question, is 83,440. Now we less the closing work in process. Closing work in process is the work in this accounting period that's still in the factory, not yet completed, not yet become a finished goods. Therefore, we deduct this amount, 92,510. We've obtained the cost of production. This is the cost of production for this accounting period. It has become finished goods. Now let us prepare the trading statement. We begin with the revenue. The revenue is 1107,272. Okay, now we less cost of sales. The cost of sales, we have the opening inventory, first item, and this opening inventory refers to the finished goods over opening inventory. At the cost of production. Cost of production are those goods completed by the factory and ready to be sold off as a finished goods. We also add purchases. These are purchases of finished goods inventory. So the amount of purchases per the question is 122,430. We also add carriage in of finished goods inventory. This is part of the purchase cost. Put a subtotal over here. Now we less the closing inventory, also referring to closing inventory of finished goods. With that, we have obtained the cost of sales. The revenue minus the cost of sales, we get a gross profit of $305,454. Right, this is the gross profit amount. Let us look at the marks allocation. If both opening and closing inventory for raw materials are correct, you get a 1 mark. Right? Cost of materials consumed section with a correct subtotal, we get a 1 mark. Operatives wages, 1 mark here. Prime cost, correct amount, and correct identification. Prime cost is written. There's also another 1 mark awarded. Each item here is awarded 1 mark. Correct subtotal of prime cost add with factory overhead, another 1 mark. If both opening work in process and closing work in process are correctly added and deducted respectively, another 1 mark. And finally, the correct cost of production, 1 mark awarded. The total of 13 marks for part A. As for the trading statement, 1 mark is given for the revenue, 1 mark for correctly transferring the cost of production into the cost of sales, 1 mark for purchases of finished goods being added and carriage inwards being added, right? 1 mark for correctly deducting the closing inventory of finished goods, 1 mark for the correct cost of sales amount, and 1 more mark for the correct gross profit amount. That's the total of 7 marks for part B. That's the end of the question.